It all started on social media. I saw it on Reddit's Wall Street Bet section. It's time to buy the stock of Kohl. Why? Because of the gigantic short position. That's why. That's why Kohl's didn't shoot up nearly 38% today because of its deal with Sephora. It wasn't about that relationship with Amazon either, where you can return goods bought from Amazon at most of Kohl's stores. And it certainly wasn't Kohl's Cash or some of their store brands, even as I begrudgingly admit that I like them. No, it was all about the short position, which is close to 50%, 5-0 of the float. Yet nearly half of the shares that trade were sold short. Whenever you have such a huge short position, it's easy for buyers to get together online and orchestrate a short squeeze, defenestrating the hedge funds that are shorting it. To which I say, what the heck do the shorts, not the mainstreams, but the shorts think they're doing here? This chain with a balance sheet that isn't all that bad simply should not be that heavily shorted down here. It's moronic. Kohl's may not be great, but it isn't terrible either. For the hedge funds, it's almost as dumb as staying short GameStop in 2021, only to be run over by the social media, specifically the Wall Street Bets outfit, and the memesters that bought into the short busting. At the end of September, I have a book coming out. It's called How to Make Money in Any Market, and I got a chapter on GameStop. I try to philosophize about how the Reddit people didn't necessarily love GameStop at all. They didn't go to the store, but they sure hated the shorts, and they wanted to rip their lungs out. When they marshaled the Wall Street Bets crowd, they had the perfect foil to the shorts. Once these longs get on the same page, it was only a matter of time before the short sellers were crushed. I write that the shorts ought to start reading Wall Street Bets because it's a powerful force in favor of a company by happenstance and against shorts by design. And Kohl's was a textbook example of a stock that had become perfect for the GameStop playbook. Ganging up on the shorts was like shooting fish in a barrel. No, I don't like to shop at Kohl's. I find it a dowdy target filled with merchandise that I can get for less at TJX if I'm willing to wait long enough. When the stock was in the 50s 3 years ago, it did get multiple takeover bids from some pretty smart people. Then the company seemed to fall by the wayside and the bids dried up. Maybe that was the clarion call of the short sellers that it was time to operate on Kohl's? I get that. And hey, the shorts have made a killing over the past few years in this one. There were some dubious changes in management and a sense that the chain just can't seem to find a way in a world dominated by Costco, Walmart, and Amazon. The stock was subsequently eviscerated and fell as low as $6 right after Liberation Day. That's precisely when the short should have covered. When a stock you've been betting against goes from 60 to 6, you declare victory and you ring the darn register. After all, three solid acquirers were thinking of buying Kohl's much higher 3 years ago. Wouldn't it be natural to presume that at least one of them might come back at these levels? Look, I don't have a dog in this hunt. I'm not a friend of the shorts or those who are trying to destroy them. I will say that where there's smoke, there may even be some fire, given how this one ignited into a double so fast. The shorts have clearly overstepped their boundaries with Kohl's. They've run into a buzzsaw of their own creation. Even now, I think they'd be wise to cover the short and move on before they have another GameStop on their hands. In the end, the short sellers have the wrong target, a company with declining sales and a lot of debt, but not one that's about to fall apart, which is what you need if you're still shorting Kohl's down here in the single digits. Hedge funds, take my advice. Cover and move on. Like I said, there's always bull market somewhere. I promise to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.